What's up, y'all? Bearcat here, coming back with the second video in my 5K account challenge series. 1 month out from the start, I'll be updating you on where the account sits today and some of the trades that got me here. Being fully transparent, I will take you into my account to show you my current account balance, and then we'll walk through some of the trades that went really well for me in the past month and those that didn't. So here's my account statement from the first month of trading. As you can see, the dates of this statement are from December 13th, just after I uploaded that first video, to January 17th, the day that I'm recording this video. So a little bit more than a month. Overall, I am down $517. You can see that I did start 13 cents under 5,000. And my total P&L to this point is minus 10.43%. It obviously wasn't the best month of trading. I would have loved to come back in the second video and show y'all 300% gains, but that's just not the reality. And while the account is down 10.5%, there were a lot of really great learnings and a lot of really great trades that took place over the past month. And then obviously some not so great trades. So we'll dive into them a little bit. I'll walk you through some of my entries and exits where greed took over and some of my learnings from the past month so that you can learn from my losses and get straight to gains for yourself. Before we jump into it, I've just got one quick shameless plug, which is my Patreon. It's where I post my daily watch lists and where I do recaps of some of my trades from the week prior. I'll be linking it in the description below. And as always, like and subscribe to this video if you enjoy this content. It'll really help me with the algorithm as I'm just starting to get this page started. So the first trade that I'm going to go over is my Upstart trade. I have to go way back for this one, all the way back to December 13th. And this play was a gap fill play, which is quickly becoming one of my favorite plays to make. As you can see, back here on August 10th, Upstart had great earnings going into the 11th, blew the stock price up, and it created this gap that's been here. Ever since then, it had this ridiculous run. If you bought it the day after earnings, you would have gained 140% at the top. But then it started to sell off, and it gapped down here after the second earnings, and it continued to sell off as the market was weak, and it headed towards this gap. So I had my eye on this gap for a very long time, seeing that it might have the opportunity to come down here and fill it. So you can see here on this day, it nearly touched it and bounced right off. Here it touched it and bounced off again. But here, with market conditions also being pretty bad during this time, I was optimistic that it would go for this gap fill. So once it entered it on December 13th and had trouble getting back above it and closed within the gap, I picked up some puts and I was hoping for that gap fill to swing them overnight. The high volume here as well made me pretty optimistic that sellers would continue selling and that gap would be filled. So moving on to the next day, you can see it gapped down on open, it sold right through the bottom of the gap, and then buyers came back in and pushed it up higher. So this next trade took place on ROKU, and it was honestly the perfect combination of fundamental analysis and technical analysis coming into play together, which is why I jumped in on this trade. This trade took place on December 15th, and you'll have to go all the way back to that date to find the news that had broke that morning, which was that the International Trade Commission had banned the import and sale of ROKU products. Zooming in on ROKU here, you can see that it had been beaten up pretty badly over the past few weeks. It would sell off, kind of consolidate, and sell off again, do the same. But this previous week, it actually gapped up twice on some pretty large volume and then began selling off again as this news came in. So I knew that there would be some movement with the stock, and this was a pretty big deal. You know, they were banning the import and sale of their products. And on that fundamental analysis, which was pretty big, there was also a technical sign that ROKU had even further to fall down. You could see here, there was the small gap up between December 6th and December 7th, and it wasn't fully filled on the 14th. It sold into the gap, but buyers did come back up and push it to close way above the top of the gap. And the rule is 80% of gaps fill, and this is not considered a fill because the high on this day was 210.33 cents, and the low on the day where it dipped into the gap was 211.20 cents. So this news broke around 8:30 in the morning, and if you were watching pre-market that day, you saw right here at 8 o'clock it started selling off. At 8:30, it just got decimated, and it totally sold off. But it did find that support right above the gap here, and then it kind of bounced around through the gap a bit as well. So you can see here, just before the market opened, buyers came back in and pushed Roku up, but there's still this gap below that even though it was filled in pre-market, I personally don't count that because if you look at the daily chart, you will still see it there. So at open, Roku sold off dramatically. It went right back into the gap. And this is where my TA came into play because obviously I could jump on it and expect it to continue selling. But at this point, I believe Roku was already down about 8% on the day, which is a huge drop. So what I did was I waited for that retest candle to come in and test the top of the gap again. And once I saw that rejection there, I got in quick with some puts and I rode it all the way through the bottom of the gap. Ended up getting out, I think, just a few minutes later. We can look at the time receipt on the trade, but it was a very quick scalp in and out. Watch that retest to see if it would break out above the gap again. When it didn't, I jumped in. When it broke through the bottom, I jumped out. All right, so up here is the trade recap. You can see I got in around 9:31 and 50, which was just before this candle closed. And I got out on 36 seconds later at 9:32 on this big wick down for a $73 profit per contract. And I held on to the last contract until about 9:39. I watched it retest the bottom of the gap, get rejected a few times, and then I sold off on this candle here for a total profit of $206. So it wasn't a massive gain, but with this volatility, I got out with profits and I'm happy about it. So going back to that shameless plug I made earlier, I want to walk you through my watch list, which I started releasing back in December after I released that first video. I released them every night after market hours to give an idea of the market that day and what I'm thinking for the days ahead. So going back to the watch list that I released for December 29th, you can see here I go over QQQ and SPY. These are usually the two ETFs that I monitor day by day. And then I start breaking down individual stocks that I am looking at. And on this day in particular, I was very interested in Square. You can see here on the Square daily chart that it kept bumping into the 9 MA and selling off for 2 or 3 consecutive days afterwards. So on this day, it must have been on the 28th when I released this, there was some higher volume here on the seller side and it had closed below the 9 MA. So I was looking at this as an opportunity to go short. So in that watch list, I gave a little brief overview and synopsis of the day's trading, and then I put down my trigger for weakness. I said if it was below 163.85, I was looking to get short with these price targets below. So this is one of those trades that I personally felt really good about. Earlier versions of me as a trader, I would have jumped in, I would have chased, I would have slapped the ask, and I would have got a really poor positioning, and then I would have got nervous on this pullback and got stopped out of my position. But in this case, I was patient. I waited for that retest to come in, and once I saw that hard rejection, I got into the trade. And I was able to ride this all the way down through my first price target, continued to hold as I saw it consolidate at that level, and then caught this sell-off down to my second price target. And if you watch the action after that, it does end up getting bought back up and going back up. So this is one of my most perfect entries and exits to date. Now, this next and final good trade that we're gonna go through is from my watch list the following day from that NVDA call. This was for Thursday, December 30th. And as I mentioned, I went through SPY and I went through QQQ. I called out some important strength and weakness levels that I was watching on just to get a general feel for how the market was gonna move that day. I also included Square because it had that second day of selling. I was anticipating a third. I don't think it did sell off for a third, but the play that I got out of here was this NVDA play. The previous day, NVIDIA had sold off, but it did find some support right here around the 9-day moving average where buyers stepped in and pushed the price higher. And it did close just above this 20-day moving average on lower volume as well, which is pretty bullish when it comes to finding support. Decreasing volume on a support level, sellers are getting exhausted, just waiting for buyers to step in and push the price higher. I was watching it for a move to the upside, and I really liked the $300 level. From a psychological point of view, it's a very flat, clean, even number. So this was where I had set my trigger to get in for a call with my targets above at 301, 302.45, and so on. So now let's look at the price action for NVIDIA that morning. On December 30th, NVIDIA closed down just a little bit from where it had closed the previous day. And it had some pretty violent movements when it first opened. It sold off, it got bought back up, it got rejected at this $300 level to sell back down, but then buyers stepped in and they pushed it above. And once it did break 300, this first candle where it closed above 300, that's when I started to wait for a retest to find the perfect entry for this trade. On this candle, it came back down, it touched 300, buyers stepped in aggressively and pushed it right back up for 10 consecutive minutes over here. And then we got this long leg doji at the top before the price started to reverse and come back down. So this trade was in line with my square trade. I was pretty hot these 2 days, and this was one of those perfectly executed trades as well, where I was able to get in on that retest and out once I saw this long leg doji, which showed some indecision as well as sellers taking control. Even if momentarily, that was my cue to get out of this trade. And now to move on to my not so great trades from this past month. So this next trade, not so great trade, is on Tesla. And if any of you have traded Tesla before, you know that the option contract premiums move incredibly quickly, and Tesla, the stock itself, also moves incredibly fast and has a tendency to wick in large numbers, and it can just destroy you. One single candle can wipe out the value of your contract. And that's essentially what happened to me on this trade, but I want to dive in a little bit to how I got myself into that situation. So on December 17th, I was very bullish on Tesla. It was below 1,000, it was even below 950, and it was showing a lot of signs to the upside. So I had these levels charted out around 940 and 950 with a price target of about 957.36. And I saw it come up and sell off and then bounce back up and get rejected at this level and sell off again close to low of days, at which point buyers stepped in huge and pushed the stock all the way up through my first price target of 940 and all the way up to 950. And it was at this point at 950 where I saw this huge wick over here and then this long-legged doji, and I was really unsure and not very confident in this trade. Even though my bias was bullish, I was feeling a little bearish at this point just due to these two candles. Then buyers stepped back in and pushed it all the way through 950. They retested there. I was still feeling a little skittish of getting in, and then pushed it even higher. And it was on this candle that I started to get FOMO and greed took over. So at this next one here at 1050, this is where I entered the trade. Didn't wait for a pullback, didn't wait for any retests, just FOMO'd in, bought a $1,000 contract, held it through this candle as I saw it as just some normal consolidation at my next price target. And then Tesla sold off all the way back down towards 950. And on this candle, the premiums on those contracts just got absolutely destroyed. If I had waited for that retest and got back in at this level, I would have been profitable, and on this candle pullback, I could have got out for a small gain instead of a large loss like I did on this candle. Now to my next one, and to no surprise, this is also on Tesla. For a moment there, I almost added Tesla to my do not trade list because it is so difficult to trade, and if you are a new trader, I would really recommend you steering clear of it. The premiums are big, they move quick, and the chart is sporadic. So overall, it's just a very difficult stock to trade options on, but obviously the options move big and the gains are huge, but the losses are equally as huge. And here is another example of me not waiting for that retest and confirmation candle and getting greedy and jumping in quick and losing my shirt. So on this day, this was January 13th, just a few weeks ago, Tesla was very bearish and it was selling off down towards this 1050 level. And I had marked 1057 as a trigger point to get in for shorts down through 1050 and down on to 1039.55. I saw this stock selling off tremendously. And in these past few candles, there were some big drops with a little bit of consolidation. And when this drop happened, it broke my trigger. I got the alert and I was ready to jump in. So I saw this candle start bouncing around at this trigger level, and I decided to get in on this candle before waiting to see where it closed. And this was my first mistake. You should always wait to see where that retest candle closes, because here in this case, it closed above my trigger and that would have invalidated the trade from the start. But I was already in the trade here. So I held on, and I saw as it got up to the 9MA, I thought to myself, okay, well, it might retest the 9MA like it did right here and right here before selling off some more. So I held on even longer. And it wasn't until it got all the way up to this candle and it showed some strength, there was some large volume coming in, that I saw this breaking 1063 and flying, that I got out of the trade for a very considerable loss. Looking back on this trade, I should have waited for that 9MA retest, since it was so close and it did get rejected so many times previously. When it broke that 9MA, I should have looked for another test here at this 1064 level, as well as the 20MA that was coming down above it. I do like to use these two indicators when trading. Had I waited for that 20MA and 1064 retest here on this green doji candle, that would have been the perfect entrance, because after that, it sold off through my two price targets, and I could have gotten in at the perfect level and gotten out with a very, very clean trade on Tesla. And I think that's going to be it for all of my bad trades. I wasn't showing receipts for those last few trades, and that's because I didn't really have a format in which I was capturing my trades and capturing the gains and losses. I was thinking about doing this video a little bit differently, but as the weeks dragged on, I realized how hard it was going to be to go back through all of my statements and pull them out and crop them together to show the story of my entries and exits. So moving forward, I'm most likely going to be recording these videos at the end of every day to recap my trades, where the receipts are right there and I can easily point to them. As you might be able to tell, some of my big takeaways from this first month of trading was to be patient. A lot of my losses came from jumping into a trade with FOMO and not waiting for that retest or a confirmation candle to confirm direction after one of my triggers had been hit. This cost me several $100s. One of the things that you saw I did really well on my profitable trades was wait for that retest. And then obviously with these two Tesla trades, I got greedy and I jumped in with FOMO, and I did not wait for those retests and I lost money. When it comes to trading, patience is absolutely key. I cannot stress that enough. Another one of my learnings is to not just rely on technical analysis for every trade decision. Obviously, it is important. It helps you identify entries and exits, but when paired with fundamental analysis, it is invaluable. And as with that Roku trade, picking up on that news story early and understanding the levels to get in and get out proved to be very valuable. So as things like that continue to happen, I intend to capitalize on that fundamental and technical analysis lining up very, very well. My third takeaway from this past month is that I do really enjoy playing gap fill plays. I've seen these play out a few times over the past month. It's very clear where the support and resistance levels are, and that's a trade that I am looking to continue building upon and getting better at moving forward. Thank you guys for watching this. Thank you for tuning in. Please hit that like and subscribe button if you enjoyed this. It will help me build this channel, and feel free to check out my Patreon. I am going to shamelessly shill it here. It is something that I've put a lot of work into, and it's something that I have found very helpful for me to kind of digest the market and how it functions and what I anticipate in the coming days, and then be able to go back and backtrack and learn from my triggers and price targets and everything that I've been working on. As I mentioned a little bit earlier, I am going to start recording these videos on a more frequent basis. I think that it will help me. I don't know if you've noticed my hair changing, but my outfit has stayed the same as I've had to spread this recording out over several days because it has taken me some time to collect all of that information. So moving forward, I'm going to try and just do quick recaps after market closes where I have everything fresh in my mind, fresh on the screen, and I can start putting these together and then releasing them at the end of every single week. So thanks again for tuning in, checking out this video. Please like and subscribe and share your comments below. I'm curious to hear what you think about this video, what you'd like to see in the next one, and just any general things that you've got going on when it comes to your trading. Catch you guys next week.